What's your net worth? Before that, let's ask first, what is net worth? Net worth is what you own. Things like money in your bank account, a paid off car, and other assets, minus what you owe to others, like a mortgage or student and credit card debt. The sum of those two parts is what makes up net worth. Why is net worth important? Net worth is used as a measure of your financial health. And depending on your level of net worth, you can roughly estimate where you are in terms of what type of a retirement you can expect as you start to pull money from your accumulated net worth to fund your retirement. To help you get an idea about where you might stand getting to retirement, we're going to take a look at 5 net worth levels. Starting at 0 net worth, then $75,000, then $250,000, $500,000, and finally $1 million. Let's take a look at what retirement actually feels like at each level. And if you find yourself at one level, what you can actually do to push yourself to the next level. Level 1, 0 net worth. If you're here, don't feel bad. A lot of people in their 20s are here too. In fact, some are even worth below 0 in net worth because of debt from student loans or a car payment taken on for their first job. However, some older people may be here too. There are some people much closer to retirement who may still be struggling with a high mortgage balance, credit card debt, or are still living paycheck to paycheck. Either way, either age, consider this point as a starting line, not a death sentence. If you're in your 20s, you have time on your side to turn even small, consistent contributions into $1 million retirement. So what do? Get started and keep going. But if you don't save and invest, I want you to understand what retirement looks like at 0. If you hit your 60s with nothing saved, you're likely still working, not because you want to, but because you have to. You're bagging groceries, driving for Uber, or doing back-breaking jobs at 67. Not because it's cute, but because your Social Security alone, which on average is $1,500 a month, struggles to cover basic rent in any city in America. And this scenario I just mentioned isn't accounting for future price inflation, on average 2 to 3% a year. A pricing force that will push many of the costs you'll need to cover in the future even higher. That's the reality. So, how do you get out of 0? Step 1. If you have debt, stop the bleeding as soon as you can. If you have high interest debt, credit cards, payday loans, that's literally negative net worth and high interest, trapping you into a cycle of keeping you paying for past purchases while eating your future retirement alive. Focus on paying down that debt first. Step 2, if you don't have one, open a savings account, not a checking account where you accidentally spend the money sitting in it with an ATM visit or a card swipe. A savings account. Even $50 a month matters right now. And don't be discouraged. This is progress. You're building the habit that will ensure the fortune, even though you're not achieving the fortune yet. Level 2, net worth $75,000. If you're here, the money you built up is likely due to a combo of a little savings, some equity from a fully paid car, and a small 401k your job set up. Honestly, if you're here, pat yourself on the back. According to 22 Federal Reserve data, the median net worth, or the middle point for those under 35 in terms of net worth, is $39,000. If you're between 45 and 54 at this point, you're running a little behind as the median net worth for your group is $135,000. A good start, but if you had to retire at this level, it's pretty rough. If you use the standard 4% withdrawal rule to that $75,000, which basically means you take out 4% a year out of that $75,000 in net worth each year, so your money will last around 30 years. If you do that, that's only $3,000 a year, $250 a month. That's really not retirement money. That's more like I have a small cushion money. So what do you do here? Use the time you have to get serious about one thing, your 401k or an IRA. If your job offers a 401k match and you're not taking the full match from your employer, do it. If you don't, you're leaving free money on the table. Those matching funds from your company can be an instant 50 to 100% return on your money just for contributing. Nothing, and I mean nothing, beats that. Also at this stage, while you may be getting older, if you're still 10 or more years out, time and compound interest is still a pretty formidable superpower to get you to retirement. 10 years out, putting in $200 a month at the market's 8% average, you could earn an additional $35,000 or more in that time. And that's in addition to your existing $75,000, still growing. 20 years out, under the same investment strategy, you could earn more than $113,000 or more. That's the power of compound interest, and it's the closest thing to a cheat code that normal people actually have to use. So use it. Level 3, net worth $250,000. You're at $250,000. A person at this level might be someone who's been contributing to their 401k for a decade, maybe owns a home with some equity, or maybe has a brokerage account they started messing around with. Trying to retire with $250,000? Well, using the 4% rule, that's $10,000 a year in retirement. Add in your average Social Security payment, let's say $18,000 a year, and now you're around $28,000 a year to live on. Tight, but it's livable. And that's provided you're in a low cost of living area, your house is paid off, and you live and spend modestly. Retirement anxiety here is not, how can I live? It's, how can I live better? This is the retire somewhere affordable and garden a lot kind of retirement. Not glamorous, but not desperate either. So how do you push past this level? Increase your income. I know, in today's market, that's easier said than done. But here's the thing. Compound interest is helping, but at this stage, the gap between $250,000 and $500,000 is mostly closed by earning more and investing the difference, not by cutting chai lattes. Unless you've got high debt or are living beyond your means or waiting for an inheritance, more income and investing is your best path to wealth. Pick up a skill, ask for a raise, start a side hustle. Your investment engine is running. Now you need a little extra money to feed it more fuel to really get it to take off and get you to an even better level of retirement. Level 4, net worth $500,000. Okay, retirement here starts to look recognizable. 4% of $500,000 is $20,000 a year. Add the average payout for Social Security, and you're potentially looking at $35,000 to $40,000 a year. If your home is paid off and your kids are grown, a lot of people can live pretty comfortably on this. This is a level of retirement where you're not rich, but you're free. You get to wake up and decide what the day looks like without an employer to answer to. You can visit your grandkids when you want. You're not checking your bank account with anxiety every week. To get from $500,000 to $1 million, honestly, at this point, if you're still a couple of decades or even a single decade from retirement, pretty much all you need to do is just stay in the market. Don't panic sell. Don't pull it out. If you have $500,000 at 45 and you don't touch it, it could easily be $1 million by the time you reach age 55. There are forms of accounts and products that can help you from your need to touch your growing nest egg. Consult with a professional first, but that can include bonds, which tend to provide more protections against stock market swings. It can mean insurance in case you suddenly need to repair something like a house. And it can mean having an emergency fund in a high-yield savings account, so you don't tap into investments for something like a car repair. And health insurance, so a medical issue doesn't take you off your wealth track. If you do that and have time, you'll likely get to the next level.
$1 million!
The number sounds like a fantasy when you're 23. But let me break down what this actually means. Because it's not yacht money. 4% of $1 million is $40,000 a year from your portfolio. Add Social Security, maybe $20,000 to $24,000, depending on your work history, and you're at $60,000 to $65,000 a year in retirement income. Now, that is a flexible retirement. You can travel, you can help your kids, you can have health care without a panic attack every time you get a bill. You're not worried about outliving your money because a well-managed $1 million portfolio can last 30 plus years. And the wild part? Getting to $1 million is not about being lucky or having a rich family. It's almost always start early, stay consistent, don't do anything stupid with your money. That's it. Boring, repetitive, yet effective. So here's the thing I want you to take away from this. The difference between retiring broke and retiring free is not intelligence. It's not even income. At least not entirely. It's starting. Literally just starting. Opening the account and making the first contribution. The people who end up at $1 million didn't do it all at once. They did it $50 at a time, $200 at a time, over decades. It's boring. And boring is why most people don't notice that it's the true path to wealth. If you found this content helpful, please hit like and subscribe and help us share it with people who need it. Thanks for watching.